Great. Thank you. Welcome, everybody. Glad to be here with you. I'm Vince Vora, the head trader here at Trading Winds. And I don't know if any of you have seen me before. I've been around for almost 4 decades now in the trading business, the last 8 or so focusing on coaching and working with students, which has been a lot of fun. We are going to talk about my Victory 2.0 system, which we started developing. We developed the first version in late 2019. I've been trading with it ever since. Earlier this year, we did make some improvements to it, and that's what I'm hoping to share with you here today. Looks like we have a great turnout. Before I go any further, I do want to encourage everyone to participate as much as possible. Please, by all means, type in your questions whenever you have one. I'll try to keep an eye on the chat and answer them as we go. But more importantly, type in your symbols, anything you want to have a look at, and I'll show you how Victory would have performed on that. Before we get to the Victory 2.0 system, just want to mention that trading can be risky. Please don't trade with real money until you are completely comfortable with the system you're using here. What we try to do here more than anything at Trading Winds is reduce risk. And I think you will notice that as I go through the presentation. So this is my TradingView account. And what you're seeing on here, all these symbols, the buy, sells, exit, etc., these ribbons at the bottom, this is our Victory 2.0 indicator. I am going to begin by explaining what each of these symbols mean, what they're for, and then go through a short list of rules that we use in order to decide whether we are going to take a trade or not. The one thing I will say is the intent here is not to take every single setup that you see on your chart. We do have a set of rules that goes with it, and the only way we pull the trigger on a trade is when everything matches the criteria we are looking for. Okay. Again, by all means, anything you want to see, whether it is an equity, Bitcoin, we'll go through Bitcoin actually. It's been really moving recently, so I'll show you how that's been doing. But it could be a futures contract, a forex pair, and it could even be from a different exchange other than the New York exchange. When we first put this system together, we tested it, and we did so on multiple exchanges, multiple time frames, multiple different instruments and markets. This is based solely on technical analysis, and so pretty much works on anything that you can chart. So let's get started. What you're seeing here, obviously, the buys, it's telling you that's a good time to buy. Now, again, there's a set of rules that will allow us to confirm whether that is, in fact, one of the buys we will take or not. I'll go through that in just a second, but you also notice that once we do see a buy signal, that all the future bars are painted green until we either get an exit or a sell. Now, there are instances where we go from buy straight to exit. There's other instances where we go from buy straight to sell. Again, it doesn't mean we're going to go short here. We need to meet all the criteria for a short trade at that point. But what I do want you to keep in mind is that when we're in a long trade, all the bars will be painted green. That is for a specific reason, to help you remain disciplined and not get scared out of a trade. For example, everything's going great here as it's climbing. We're all happy, we're calm, everything's great. Once we start to see a pullback like this and we see a series of red bars, a lot of people get scared out of the trade at that point, only to see the trade continue going higher. So that is the reason why we paint all the bars green. When we're in sell mode, we paint them all red. So, and from time to time, you'll see yellow bars. That means we're neither long nor short. We should be on the sidelines, just watching and waiting for the next setup. But the one thing to keep in mind is that if you are long and you're following the green bars, any change of color, whether it is green to red or green to yellow, whether it is a sell signal, an exit flag, whatever it is, any change in color means that we close that open position fully, not take partial profits, but close completely, okay? Works the same both ways. Now, you'll also notice that there's these little dots as well. Some are going to be green, some are going to be red. What those are is we call them re-entry opportunities. That means the same criteria that came together when we had a buy signal has come together again. But since we're already in a trade, we call it a re-entry. That way we can, if we missed the first one, we can now get in here. Or if we did buy in on the first one and we're a little more aggressive, we can add to our position whenever we see one of these little green dots or red dots in the case of a sell. Okay. And at the bottom here, you're going to notice that there's a couple of ribbons. Okay. Now I'm on a monthly chart here. Let me go back. I'm going to go to the extreme opposite end, the 1 minute chart here on the SPY. And I want to show you these ribbons. As you can see, we're on a 1 minute, and now we have a 5 minute and a 15-minute ribbon. What you're going to see whenever you go to any time frame is you're going to see ribbons for two time frames that are higher, slightly higher than the one that you are on. So for a 1 minute, we have a 5 minute and a 15 minute. If I go to the 5 minute chart, you're going to see the ribbons for a 15 minute and a 30-minute time frame. So, and that continues as we go. So if I go to the daily chart, you're going to see a weekly and a monthly. Okay. Now, we don't use any time frame higher than a monthly. So when you're on either the weekly or the monthly time frame, you are only going to see the monthly here. Okay, keep that in mind. But the whole purpose for this is to make sure that we are trading in line with two higher time frames. So if we are in a long trade here on the daily time frame and all bars are green, we want to make sure that both the weekly and the monthly are also green. That means short term, we're in bullish mode. Medium term, meaning the weekly time frame, we're bullish, and longer term, monthly, we're also bullish. When you have all three time frames aligned, the odds of a successful trade just increase exponentially. So that's why we do this. And it's just visually very easy whenever you bring up any symbol to have a look at the two higher time frames. And we don't have to go in and change the time frames for these ribbons. They're automatic. They automatically adjust to two higher time frames than the one that you are on. Okay? Keeping it very, very simple. Now, there is one other part to this. Let me go into the settings here and click on Show Table. First of all of these symbols here are customizable, meaning you can change the colors if you want. You can also check them or uncheck them. There's a couple other settings. TPs is what we call them, take profits. So as you'll notice here, for example, this buy signal, we get it. It starts to go our way, and then we see a TP, a take profit. That is just a suggestion of where you might want to take some of the trade-off, right? Pocket some of the profit and keep the rest going. Then we get a dot, a re-entry, which means we can add some to this position. And then we get another suggestion to take some off the table and so on. And we go along until we change color where we would close the full trade. So for me, especially being the creator of it, I don't usually keep the take profits on my chart. It sort of messes it up a little, and I know more or less where they are. So, but they're all here. And again, you can uncheck or check whatever you want here, change the color, change how they appear on your screen, so you can totally customize it to your own liking. The other thing is that there is a table that also comes with this, where you'll see it on the left-hand side here. And in the settings down here, you can add up to 20 different symbols in here. Right now I have it set with only 5, and you can see the chart only has five rows here. Okay. But if I go up here and I change this 5 to 10, for example, and click OK, now you're going to see that suddenly we have 10 rows here. Okay. So where this is very handy is, for example, if you have, say, 10 different open positions, you put those symbols on this table, and then whenever there is a new signal of any kind, whether it's a buy, a sell, a re-entry, etc., it'll be populated here. So if you're waiting for some sort of exit, right, then it'll automatically pop up here. And that way you don't have to keep flipping through your open position charts to see where you stand. It is all here. But if you don't, and you can move this anywhere on your chart, whether it's on the left side, the right side, near the top of the chart, the bottom of the chart, it's all customizable in here. So you see, I have it at middle left, okay, but there's top right, top center, etc. You can customize it any way that you want. And again, now for demonstration purposes, I'm going to uncheck this and clean up some real estate on my chart so you can see the other examples in a very clear way. Okay. So again, let me know if you have any questions or want to look at any symbols. I'm happy to bring them up here and demonstrate them for you. Now, the reason why it was originally on the monthly time frame is you can also use Victory to judge what the overall market is doing and get an idea of whether we are in a strong bullish market, a strong bearish market, or really a market where there's really no trend at all. Brighton, thanks for crowdsource there. I will bring that up, or CrowdStrike, I'll bring that up in a second. So I like to look at the Dow Jones, the S&P 500, the NASDAQ 100, and the Russell 2000 as the main index charts, right? And I like to start from a very high time frame, so the monthly. So if we are, strongly, bullish on the monthly time frame. So, for example, there was a buy here, a re-entry here, but we have been trending upward here and all green for quite some time. And we can say the same about the Dow, about the NASDAQ, about the Russell 2000, right? Now we know we're in a very, very strong bullish market. So what we're going to be looking for is mostly long trades. Now, of course, as you open various positions, you're going to want a couple in the opposite direction as well. Markets don't ever go straight up. So during those times when they pull back a little, those couple of short positions will help you not only hedge your overall portfolio, but help you profit on those as well. And I'll show you a list of our recent trades that we have taken in just a little while. But I like to start at the monthly time frame, have an idea of what the overall market is doing, and then work my way back to my desired time frame. Now, I trade mostly off the daily, but again, the rules I'm about to share with you and these examples work on any time frame, any market, any exchange. It's strictly technical analysis, and it's the same algorithm across. Let's go through a few trade examples. And actually, I'll bring up CrowdStrike here and see if we can use that as an example. So here's CrowdStrike. Now, I'm going to go back for a second over here just to share with you, and I'm going to zoom in, the type of trade setup that we like most, that we look for. Here's the criteria we look for. Number one is we need a victory signal, right? Whether it's a buy or a sell, we need that as a starting point. Now, there is one thing I missed. I apologize. This blue line right here. This is a 20 period simple moving average, okay? Not exponential, not weighted, simple moving average, 20 period based on the close. That's it. The reason why we have this on our chart is to judge the amount of momentum behind the trade, right? So what we're looking for is when we're looking to trade to the long side, we want this line sloping upward. And the higher the degree of slope, the better. When we're looking to trade to the short side, we want it sloping lower. And again, the higher the degree of slope, the better. It'll all come together as I go through the rules. So let's begin. So we have this buy signal back here on November 2nd of last year, right? And then the second thing we look for is the blue line. Is it sloping higher or not? In this case, it is. Not as dramatically as it started to slope later, but it still had a pretty nice slope here. What I look for is more or less a 45-degree angle, just visually like this. The reason why I look for that is anything that has this degree of slope or even higher, this one here is even higher, right? That, to me, anything with this type of slope or better has a very significant amount of momentum behind it. It means this stock is really moving, okay? Does not mean you can't take trades with less slope. You can. Any slope is great. I'm even going to show you how you can trade in areas where there's no slope at all, but we have some very tight rules around that. So we're looking for the symbol. We're looking for slope on the 20. Those are the first two things, and we have both here. The third thing we're looking for is for the bar associated with that buy signal. We want that bar to be as close to the 20 MA as possible, right? We don't want it to be up here. We want it to be close to the 20. Reason being is when price moves away from the 20, it tends to snap back. So the last thing we want to do is open a trade up here only for the trade to immediately retrace back to the 20 on us and put us in a loss position immediately. We're looking for a bar close to the 20. And then we're looking for a bar where the close of the bar is close to the high. In other words, the top half of the bar for that day. And if I was looking at a 5-minute chart, it'd be the same thing, but for a 5-minute bar, right? So we have that. Now, in addition to that, I go down and look at the ribbons and look at the two higher time frames. Are they the same color as the trade I'm looking to take? In other words, if I'm looking to go long and the bars are green, I need these to be green. If I was looking to go short, I would need these to be red. Okay? Not one, but both. So if we meet all that criteria, then we know that number one, we're trading a stock that is trending higher. Depending on the slope of that line, we know we have momentum higher and potentially significant momentum on our side. We know we're opening the trade at an ideal spot, which is very close to the 20. We know that on this particular bar, it's closed in the top portion of the bar, which means it has a very high potential for following through, for continuing higher over the next few days. And then we know that we have the higher time frames on our side as well. That not only is this stock trending higher on a short-term basis, but also on a medium and long-term basis. So now we have stacked the odds in our favor. There's one other thing we look for whenever we take a trade. We look to our left and we look for prior activity, right? Meaning areas of support or resistance. If there's nothing but blank space, okay, and then, the most ideal situation is that we are at or near an all-time high where there's absolutely nothing overhead, then we know that there's nothing preventing this from going further, right? So you'll notice from down here, let's say down here, okay, when we pulled back, look at where this ended, right at these highs, right across here. There's this grouping of candles right here that were acting as support, right? And then when we started to move higher, there's this little bit here, right, which acted a little bit as resistance. So we kind of moved sideways for a couple of days. And then once we broke above that, we were gone. There's nothing else above there. That's what I'm talking about. So what we want to try to do is identify these setups in an area where the road ahead is wide open. That generally results in a move like this. Okay. So that is what we're looking for a buy signal. Those are the rules. I'll repeat them again as I go through another example. And then what we do is, using those take profit levels, or we could use Fibonacci levels, or if there were prior highs, we'd use prior highs to identify areas where we might want to take some off the table. And then if we get a re-entry, we add some more. And then any change in color, we exit that trade completely. So this one here, we would have entered around 185 or so. Oh, one of the things that I don't think I mentioned that I should have is, once we identify a setup that meets the criteria, what we do is we identify the absolute high of that day, and we wait for a trade that's one tick or 1 penny above that. So in other words, we allow this bar to close, and then on the next day, we wait for a trade above that. Okay, so if I zoom in, you'll notice this day that we opened more or less where the close was. We went a little lower, and then we started to climb. And the only time we'd enter the trade is if we took out the high of the setup bar, okay? In which case we did here. And so that high on that day was 184.67, okay? And then the exit here on the close was 246.89. So quite the trade there. But this is exactly what we're looking for. So as I flip through examples, what I want you to focus on are these areas where we have slope, where we have this clear trend higher, and we have significant slope on the blue line. Okay, this would have been another excellent trade. It meets all the criteria. We have a buy signal. We have the 20 sloping. The bar is near the 20. It closed pretty much at the high of the bar, right? And then when we look to our left, blank space, ribbons are a match. We wait for a trade above that high, and off it goes. We add to it here, exit here. Okay? It's that simple. Nothing more than that. Someone's asking for NVIDIA. Here's NVIDIA. Okay? Now I'll zoom out again, but here, I'm glad you brought this up. Another great example. So if you get a trade that meets the criteria, but the bar is too far from the 20, generally I skip it and I move on. Or one other thing you can do is go in, say, with half the size that you would normally go in on that trade, right? Because the further away it is from the 20, the more risk we are taking on. And we don't like risk. We want to avoid risk. One of the things you're going to notice about the Victory 2.0 system is that when it doesn't go our way, it gets us out very quickly. There are times where it could gap, and the gaps we can't help. We can only try to avoid, so we avoid earnings events, for example, to avoid those gaps. But generally, when it starts to go against us, it changes color immediately. So even if we get in, say we got in here, and it took us out immediately, it'd be a small loss, okay? Here's another example here. Gets us in, gets us out, small loss. What we're trying to accomplish is not only having more winners than losers, but having our winners be much greater than our losers. That's the kind of math that'll keep you in this business for a very, very long time, okay? Now, I'm glad you brought up NVIDIA. It gives me a great example for to go over the rules of a trade where we do not have slope on the 20. There are only two instances where you actually enter a trade when you do not have that 20 sloping in the direction of your trade. Okay. Here's a perfect example. So we get this buy signal here, but it is not sloping upward, is it? The 20. So the two conditions are, one, the setup bar takes out a prior high, okay, which would be up here. So at this point, we cannot say that. Two is the 20 has been retested, meaning we move above it, we come back, to test it, and it holds and we bounce off it, okay, and take out that prior high. So for this buy signal, we did not have either of those. We did not break a prior high. We had not had a successful retest of the 20. So we could not take that trade. If we're taking this trade, we're taking much more risk than we would prefer to take, okay? So we're trying to keep the approach consistent for a reason. When you trade the exact same set of rules over and over and over again, you have consistent results, meaning we have more winners than losers. Winners are bigger than the losers. Now, we go to this one. Do we have a slope on the 20? No, we don't. So we can automatically skip it and move on and look for a trade with slope, right? But if we want to wait and see whether we take out a prior high or whether we retest that 20, okay? In this case, we cleared the prior high. So we didn't take the trade on, when it initially broke the high of the setup bar, but when it closed outside of this high, then we could get in. But remember, let's say that high was further away. And now when it breaks that high, we're far from the 20 again. You don't want to get in on that, right? Or you want to take smaller size. You want to be careful. But in other words, we could have gotten into NVIDIA up here near 90, okay? And yeah, that would have been a great trade. Now, a lot of times what you'll see if you don't take these is you'll end up seeing a re-entry, one of those little dots appear at some point so you can take advantage of the rest of it, even if you're not jumping in on those, okay? But basically, this is what you want to see, okay? And so here was a recent one on NVIDIA that met all the criteria we were looking for, okay? Now, it started to run. It actually went from, if you look at the high of the setup bar, was 140.37, okay? And we got to a high above 150. So about a 10-point move. So we could have taken some profit. First of all, we say any prior high, we take some off the table. So taking some off there. But then it turned around and changed color on us and stopped us out. Now, the stop, that close was, just above that bar. But again, even if we hadn't taken any off the table here, okay, that would have been a small loss, a break even or a small loss. And that's what we want. Not every trade is going to be a winner. I can guarantee you that. You will have your losing trades. The key is keeping your losses small. That's the main thing. Okay. Let me know if you want to look at any other symbols. I'm going to start flipping through different markets, different time frames, so you get an idea of how this works. Are there any day traders here? If there are, we can look at, say, the 1 minute time frame, the 5 minute time frame. Here's NVIDIA on the 1 minute. So as long as you're trading a stock or a market that has enough volume on the lower time frame, it works exactly the same, right? Let's go back. Let's have a look at this trade in here. So you get the buy signal. Look at the slope on the 20. Beautiful, right? Where's the bar? Very close to 20. It's actually overlapping the 20, right? If I zoom in here a little, where's the close? It's right near the high of the day, right? What are the ribbons telling you? They're the exact same color. You look to your left, blank space, right? You wait for one tick or 1 penny to trade above this high, you get in and off it goes, right? Exit here. So in around 143, out here, sorry, let me see this. Yeah, there's a 1 minute time frame, right? 143.16 out at 144.02, around there. This is, remember, these are minutes. You're in this for minutes. If we go to a little further, all this mess here, the reason why we're focusing on slope on that 20 and momentum is when we don't have momentum and you're in a sideways consolidating phase like this. This is where a lot of traders lose money, because you get in, you get stopped out, right? You go long, you get stopped out. You go short, you get stopped out. Back and forth, back and forth. That's what we're trying to avoid. So simply avoiding the flat areas, the areas where there's a flat 20, will save you a ton of money. Okay. And then when you incorporate those rules I gave you, most of these would be ruled out because they don't meet all the rules. That's the whole point of that list of rules that we're following. Okay. So you wait for the clean areas. And again, here is one. You have slope. It meets all the criteria. Again, whether it's on a 1 minute, 5 minute, hourly, daily, weekly, month, it doesn't matter. You meet the criteria. You get in. If you get a reentry, you can decide, do I want to add some more or not? Again, if you're more aggressive, you do. Otherwise, you hold and just wait. Um, you know, use that as confidence that you're in the right trade. It happens again and again and again and again. Eventually, you're out up here. Okay, so um, that this is basically what we're trying to do over and over and over. Okay. Yeah, someone says sideways equates to doldrums, go have lunch. Exactly. Sometimes on the daily chart, when you see that with the SPY, go golfing or do something else. It'll save you a lot of grief. Absolutely. Now, as I said, this works on any market, any time frame. Let's look at gold, for example, right? Here's a classic example with gold. Now, on some charts, you're going to notice a lot of lines, a lot of markings. These are there. Um, we have a group at Trading Winds, a membership group, where we meet live with our members 3 times a week on Zoom for a minimum of an hour each time, Mondays, Wednesdays, Fridays. And we talk about different charts. We're looking for trade ideas. Um, I'm teaching certain technical analysis topics, etc. And that's how these lines come about. And we leave them in there so that we can go back and revisit that chart and know exactly what we were looking at when we were here, what we were looking at over here, etc. And we can also tell how it performed compared to what we were predicting it was going to do at the time. So there are charts like this that are going to be marked up, and we leave them there for a reason. I'm going to, at the end, show you how you can join us for the next month on that membership. So again, if you look at these trades, um, and here's one down here where we had a complete flat 20. We could easily say, and I would encourage you to just say, no, not good enough, doesn't meet the criteria, we have no slope, move on. When you do get slope, here it is. We finally have slope, we have re-entries. That's where you enter, as long as it meets all the criteria, right? And off we go. Okay. If you want to, if you notice here that we were in a very tight range, right? We had a series of highs right along the same price level, series of lows along the same price level. You mark the highs, mark the lows, and then wait for a breakout. You could do that as well. But following the signals and the set of rules will keep you on the right side of the market all the time. So again, you can trade it using gold, silver, wheat, futures, whatever you prefer. You can trade the dollar index, anything. The dollar index right now, what we've been discussing with the group is it's been in a range here. Now, sometimes when you get a wide range like this, there are still plenty of trades to take along those slopes, long and short. We haven't really looked at a short, but it works the exact same way. Okay, I'll find one in a second and go over that with you. Okay, when it's a tighter range, there isn't enough room from one area to the other to really take trades in there. So what we do is wait for it to pop out of that range and then start looking for trading opportunities. Okay. Um, we talked about Bitcoin at the start. Ever since the election results, Bitcoin has been running. Well, have a look. We were watching Bitcoin throughout all this area here, doing really nothing but grinding, kind of sideways to lower, but it really was just a messy look. Then it popped out, caught our attention here. There was one here where we did have slope, and we were breaking above that upper trend line. Okay, here it was. Then it retraced, And then this is the buy signal we got after the election. Now, I want to show you this for a specific reason. Again, here's one of those examples where the close or the entry, which would be at the above the high of this bar, would be a little further away from the 20. Okay. So if we're going to put our stop below this bar, we're taking a significant amount of risk, right? So we have to decide at that point, is that too much risk for us? Or can we participate with, say, half the size we normally do, right? But again, you'll notice that when you have slope, when the higher time frames are aligned, when there's nothing but blank space to your left, it has a very easy time moving forward. Okay. And that's really what we want to focus on. Blue is asking for APP. App loving. Yeah, here's another perfect example, right? So you get a long-winded consolidation. This is what we call dead money. Okay. Whether you're buying and holding for the long term, you're not earning anything, right? It's dead money. If you're trying to trade in and out of this, you're getting stopped over and over again. Stop, 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 losing money. This is not what you want. What you want is slope on that 20, okay? And empty space where you're about to enter that move, okay? So all of these did not meet the criteria. This one suddenly had slope. It's right at the 20, closing near the high of the day, higher time frames aligned, nothing to your left. Okay. We would also check the earnings date, make sure the earnings date's far away. In this case, it was very far away. And off it went. Could have added to it here, add to it here, and then we'd be out before earnings. Okay. In a situation like this, what I always tell my students is if you already have a significant profit, you've already taken some off the table, okay? Before earnings, you don't have to close the whole trade. You can take most of it off, but leave a small portion and then see if it gaps in your favor, great. You make even more. If it gaps against you, you lose that small portion you have left, but you still come out of it with a winning trade. And again, whether we're trading the daily, the weekly, here's the weekly here, entry, okay, back in here. Or, if there's enough volume on this and you want to trade the hourly, the 15-minute, the 1 minute, I don't know if this one trades. Yeah, there we go. This is a 5-minute chart, right? Same thing. Here's another setup here. There's slope. It is near the 20, closing at the high of the day, higher time frames aligned, empty space, off we go. It's just over and over and over, rinse and repeat. That's it. I always say your job as a trader should get boring if you're doing this correctly. You won't really find it all that boring when you're making money, but the routine every day should be the same over and over and over again. Okay. Now, let me tell you a bit more about that membership before we run out of time. So, with our members, what we do is every Sunday to Thursday, we send out emails in the evenings. I'll put together a brief description of what happened that day in the market and where I think things are going, etc. And usually it's in video format. I will put together a brief 5 to 8 minute video. And in that video, again, I describe what I noticed happened that day, what the main events coming up are that could affect the market. And we also share trade ideas there. Now, they are not recommendations. We don't run an alert service, but what we do is highlight the trades that I am looking at. So you're basically looking over my shoulder and being able to see the ones I am selecting, okay? And then we review those during the live market chats that we have 3 times a week. We get together on Zoom every Monday at 1 p.m. Eastern, Wednesday at 10 a.m. Eastern, and Friday at 1 p.m. Eastern. And we spend a minimum of an hour together. We do open our cameras. We share trade ideas. We go through dozens of charts. That is also a great place to ask me any trading related question you have. So we have members that are very experienced, have been trading for decades. We also have ones that are just starting out. We try to help everybody. We try to help each other out. So it's a great place to learn and also get some look at, find some great charts and some great trade ideas. We also track our trades there. And we do so with a simple spreadsheet like this. If you look at the bottom, there's all the different dates, right? So the most recent, during last night's email or video that I sent out, these were the two that I highlighted: DLR to the long side, NKE to the short side. So if we go back to the daily time frame, we look at DLR for a long. Here it is. Okay. This was the setup, the reentry right here. Again, what do you notice? Slope on the 20, right? The bar close to the 20, closing out at the high, higher time frames align. You look to your left, there's very little activity there. We wait for a tick or a penny trade of yesterday's high, and off it goes. So far, a great start to that trade. NKE to the short side, same thing. Okay. Again, for short trades, it's the exact same thing, but in the opposite direction. So we're looking for slope lower, right? We're looking for a bar that's close to the 20, that closes near the low of the day, and both higher time frames are red, just like this is, right? And then we look. Now, this one did have some support down here, some prior activity. But, I didn't think it was all that much. Still like the trade. And so far, it has triggered. It has moved in our favor. If we look back a few more, go back to the day before, we had WFRD short. Okay. So again, even though the overall markets are trending higher right now and are bullish, you can find some short trades at the same time, as long as you can meet every single one of those rules. Okay. If you have a significant downtrend going with significant momentum lower on both, on all three, the short time frame, the medium time frame, and the long time frame, this is being sold for a reason. There's weakness here. So we might as well take advantage of it. Okay. This one, it was this sell signal here from the 17th. Okay. We never did take out that low. So this one did not trigger. Okay. So not a loss, not a win, not a trade yet. Now it looks like it's setting up again today. We'll see once that bar closes if we can get a trade below that low, and then we go from there. All right. I'm just going to quickly show you a few so you can see what's going on. The day before that, on the 14th, we had BMRN, and we also had Merck to the short side a few days earlier. Okay. So BMRN, okay, here it was. And there it is. Again, look at the criteria. You have slope. You have a bar close to the 20, closing near the low. Higher time frames are aligned, nothing but blank space, and off it goes. Right? Merck was over here. Same thing. There it is. Meets all the criteria. Off it goes. Okay? Again, we keep track of this for a reason. There was WELL to the long side. These are the ones that I select. These are the ones that I share in the nightly videos. Okay. So it was back here on the 7th, November 7th. I can show you here. There it is, November 7th. So we had this. Okay. It did trigger that day. Then it pulled back on us, but it did not get stopped out. Now it's giving us a re-entry, starting to move again. So we're still in this one. Still looks good. Okay. They're not all going to work out, by the way. They're not. But the key is when they don't, we keep the losses small. We also had DocuSign and NVIDIA going back. Okay. DocuSign was here, right? Worked out beautifully. Still there. NVIDIA was back in here. So it did move up. We did take part profit there, and then it turned on us, stopped us there. Okay. Now, earnings are tomorrow after market close. Okay. So we always want to stay away from earnings. So You want to make sure you have at least 10 days before the next earnings event, hopefully much longer than that. Okay, you've got to give the trade time to play out. We also had GM on November 4th. Let's go to GM. I won't go any further than that, but it was here. And here's another thing we do. We use the Fibonacci levels. Okay. When we're at an all-time high and there aren't any other prior highs to look at, or uh, aside from those take profit suggestions that we have built into the indicator, we look for areas where we might want to take some profit. And so we draw our Fibonacci. So when we're looking at this trade here, what I do is I look to the left, I find the most recent low and the most recent high, plot the fibs from there. The targets were A, the prior high. That's the first one. We take a third off. Then the next one, the 1272 level here, we take another third off. And now we wait for the final third. And the final third, we carry it through until we get a change of color. Now it's pulled back. If we get a re-entry, we can add a third back and keep going. But you get an idea of how these trades work. It's very simple approach, very straightforward. And again, whether we're looking at stocks, futures, Forex, actually Forex, I haven't showed you any examples. Let's look at Forex. So the Euro USD pair, the US dollar has obviously been very strong recently, meaning the Euro has been selling off. And again, here's an example, right? You get a big, huge bar, okay? So, where are you going to put your stop? Up here, if you're getting in down here, it's too much risk. We skip it, right? And we skip it and move on. We're not worried about what we miss. We're worried about what we get. But the main thing that we're trying to do is keep our risk low. Make sure our losses are small. We could withstand many, many losses with just one big winner, okay? But if you're starting to take bigger losses, it's hard to come back from. All right, so we want to avoid that. Let's look at Japanese yen. And again, anyone wants to look at anything, by all means, let me know. So here it is. Now, here's an example of a trade where, everything seemed to be okay, but when we look at the ribbons, they're not both green, right? So we're not ready yet. Can't do it. So these are there for a reason, to keep the odds stacked in your favor. If you try to trade without them, you're increasing your risk. And there's really no need. We get many, many trading opportunities every day. So the other thing that when you get the indicator, the other thing that it comes with is a training class on exactly how to use it. What we do in the training class is spend a lot of time comparing one setup to the other, because the rules are straightforward. I just gave them to you, right? But let's say you had 10 potential setups on the same evening. You don't want to go out and buy all 10. You want to buy one, maybe two. Okay. You want to spread your trades out. All right. So how do you select the best trade out of those 10, or the best two? That's what we spend our time on in those training classes. We show you how to compare one to the other and the tools you can use to decide which one is stronger than the other. At the end of the day, I do it for you in a sense where every evening I'm doing a scan and I'm showing you exactly what I'm looking at. So you can just follow along with me if you like. But everyone's different. Everyone trades on a different time frame, different market. We have clients over in India trading the Nifty, right? We have clients in Australia trading the Australian exchange, or in the UK, etc. This list here is only from the New York markets, okay? But you can use it where we have many clients in Canada, etc. Rhonda wants to look at ES. I'm assuming you mean the E-minis, the S&P. Rhonda, let me know if you mean otherwise. Again, the easy trades are the ones with slope. That's all you want to look at. So that's the main thing. Doesn't meet the criteria. So look at this buy. There was slope. Let me zoom in. The bar's near the 20, right? Close near the high of the day. Higher time frames align. We look to the left, there's a lot of blank space, and off it goes. It really is that simple. I don't know if you meant TY for thank you or you wanted to look at Tricontinental. Either way, I'll look at it. Um, you know, before I get off, I do want to share one bit of um advice when you're trading with technical analysis. A lot of times, you can select a chart to trade based on the look in the first second that you bring that chart up. Is just look at the bars, and what you're going to see is a chart that looks like this um, during this trend. Okay, let me move over and zoom in. What do you notice about this trend? Yes, it's strong, it, beautiful slope, all of that. But what you're going to notice is that just about every bar, whether this is a daily time frame, but it could be a 5 minute, hourly, whatever. Every bar is almost the same from high to low, right? The same sort of size bar, and it's just a nice, steady, clean move higher. Okay. When you get volatility, when volatility or uncertainty comes into the market, you kind of get this behavior where the bars suddenly are all different sizes. You get several big ones, several little ones, and it's just all back and forth. Okay. That's when you know that there's concern out there, there's fear, there's maybe an event coming up that people are uncertain about. You're no longer in a strong, clean trend. Okay. So focus on the charts that are nice, strong, clean trends. Um, and they're obvious to you. If you have to stop and think, are we in an uptrend or are we in a downtrend? Then it's not very clear. I don't think anyone, regardless of their level of experience, can look at this chart and say we're in a downtrend or we're in a sideways. It's obvious, right? It's going higher. And that's what we want to really focus on. Okay. So you don't want to trade a chart that's messy like this. You want to trade a nice, clean chart. Now, what ends up happening a lot of times is when this price moves outside the range. So you have this high and this high that are more or less in the same area. You have these highs or these lows in the same areas. We could box this and wait for a break outside of it. Okay. When it breaks, not only do you get a bigger move in the direction that it breaks, but price usually settles down. Let me show you an example with going back to gold here. So here's this box, right? So when you have a channel like this, we're all tempted to jump in. We're all looking, when's the next opportunity? But what we need to do in a situation like this is just be patient and wait for it to clear this box, get out of it. Okay. Now, in this situation, if it broke below the low, there wouldn't be blank space to the left. There'd be lots of activity here. So it wouldn't have been ideal, right? It might have been ideal up to this point. Then the activity really picks up. There's a lot more support. But breaking out above, it was an all-time high at the time, nothing but blank space. And so it had a much easier time. And, price eventually settles down and you start seeing nice, steady, same size type candles. Okay. That's what we're looking for. The other thing to remember about these channels, the one thing that'll help you remain patient is that the longer it goes on, the bigger the move is going to be. What I want you to remember is that whenever you get a break, you measure this. Draw a line, measure from start to where it breaks, and then you expect a similar size move in the direction of the break. Okay. So if you look at this size, it's very similar, isn't it? Exactly. That's what we're looking for. So rather than being frustrated, waiting for this to break out, excited because the longer it goes on, the bigger the move is going to be. All right. So you definitely want to keep an eye on that. Now, let me go and explain to you more about our membership. So if you go to tradingwins.com/start, it'll take you to this page. That's me, by the way. And it'll tell you more about what we're doing here and what we're offering. But if you get partway down the page, there's a video here where I explain it in detail. You can read a lot about it throughout here. But down to this portion here, and by the way, if you click on any of these banners that says start with us, it'll take you to the page where it'll have all of this. But what we're offering are 30 days access to what we call our Trading Wins Elite program. And so what you're going to get is the indicator itself for TradingView. All you need to do once you sign up is send us your TradingView ID. Okay. It's not your email address. It's whatever ID you created. It's usually on the top left of your TradingView chart. And we'll set you up. So you get 30 days access to that indicator. Any updates that we make to it, you get for free. You also get 30 days access to our community and our live coaching, which is the 3 live Zoom calls every week. So you can join us. If you sign up today, you can join us tomorrow morning at 10 a.m. for that call. By the way, those calls are all recorded. So if you cannot join at the time where we're live, but you have questions, you have symbols that you want me to review, that sort of thing, you just send us an email ahead of time with your questions or your symbols. We'll review them during the live session, and then you'll receive a recording afterwards where you can watch it at your leisure and get your answers, okay? You also get the nightly emails every Sunday to Thursday, right? 5 times a week with the nightly videos where I share my trade ideas. You also have access to a library of videos, technical analysis videos that you'll be able to watch at your leisure. You get all of that. Normally, it's $291. For this webinar, it's just $7. $7 for the month. Okay, so go to tradingwins.com/start. Pick it up. You get to try the indicator for a full month. You get to join 3 live sessions a week for the next 4 weeks with us. You'll get those nightly updates with the trade ideas every Sunday to Thursday, and all for the next 30 days. So I really hope you take advantage of that, and we see you in our sessions. Now, I think I'm out of time. Let me just quickly run through the questions, see if there's anything here. Thank you, David, for putting the link in there. Yeah, SMCI, let me just quickly, before I want to turn it over to David so you can get the next presenter lined up. SMCI, again, looking back, of course, hindsight's 2020, right? But have a look at this setup in here. This is exactly what I'm talking about. So you had this sideways action, this channel going. We were waiting for a breakout, right? And then what happened here? Oops, let me clear this up and try to zoom in quickly, right? So you had this long-winded channel. We were waiting for a breakout. You got a little break, came back to retest it. Look what you get right here, a re-entry. Now you have slope, nothing but blank space, higher time frames align, and off it goes, okay? Cam says, what is the price if I decide to stay with the program? It's all on there. You have choices between a monthly and an annual. You can renew at $97 a month, or there's additional savings for annually and so on. But again, it's tradingwins.com/start, just $7. I hope you try it out. Thank you again, everybody. And thank you, David and Anka, for having me on. I really do appreciate it. David,